Hello, you incredible friends. This is your pal Edward Zia speaking. I'm with the legendary ANZ money expert Tu Dinh. Great having you with us. And how are you on this beautiful Monday?
It's raining outside, Ed, and it is still beautiful. It's nice and cool. We're not getting that hot 37 degrees like we did last week. So it's amazing. I'm feeling amazing. Did my walk this morning. So all good.
Oh, love it. And
I'm going to tell you what.
I was just going to say, you live in Brisbane, right? You live in beautiful Brisbane,
Yes.
Queensland in sunny Australia, don't you, too?
Yes, I do. It's not so sunny at the moment, but I love it. And thank you for having me today, Ed. This is a great opportunity, and it is my first time doing the video, so it's very exciting. See how it goes.
It's a pleasure. It's just so good to have you with us too. And just to let you know, friends, if you've come in, like, share, and comment, you could be watching this on LinkedIn, Facebook, YouTube, or Twitter X. And I've got us open on LinkedIn Live to keep track of your comments. Now, Tu and I were having a great chat off camera, and Tu was telling me her story about how she started her business, how she's a franchisee with ANZ, and I thought it was fascinating. Sorry to ask you to repeat yourself, Tu, but tell us your story. Like, tell us how you got into ANZ, that you're a franchisee with them. I'd love to hear that backstory. That was fascinating too.
So when I was 18, my dad always wanted me to get into university, as every Asian parent wants you to get into university. I wasn't really sure what I wanted to do. So at 18, 19, I joined the bank, and I walked into the bank, and the first thing I did was I looked to the right of the department that's where the finance department is. I'm going, that's a really important department where you give money to people, and that's where I want to be. So I inquired about it, and they said, it's going to take you 20 years to get into this department just so that you can do the process work. And I'm going, 20 years, I'm just going to be so old. So anyway, we had to start it from telling, did the telling, and the first day that they locked me in that bird box, I'm going, I'm not going to stay here for the next 20 years.
Did you call it a bird box? I like that.
We call it a bird box because every time 9 o'clock comes, 9:30 comes along, they put you into that bird box, and I'm standing there for 8 hours serving customers, just giving money away, and I'm going, oh no, this is not going to be my life. So I went to uni, and I was still working with the Commonwealth Bank. So by the time 25 comes along, and Commonwealth Bank actually advanced into the new platform where they actually promote people with skills rather than how long you've been with the bank. So I got a promotion. I got up right to Premium Financial Services, which is the highest in Commonwealth Bank lending, in residential lending.
Then I was in is that all the rich people? Is that like where you're loaning money for yachts, big buildings, and you're flying around on jets? Is that the job?
That's the job. So Commonwealth Bank was the first bank that did that. They drew us. There were 40 of us, which had business banking background. We had residential background. We also had to do certificates for financial planning, and also stock placing for all the 20% most valuable customers for the CBA. So they took us all up there, and it didn't work out very well, I must say, because 20% of the customers, 40 relationship managers. It was just, it was hard. It was a lot of challenges, and you couldn't service it all. But it was a great place to learn. That was a great place where I've met a lot of my friends from the CBA. We eventually all went all our different ways, but I think most of us became quite successful in our own ways. One of my best friends in that area, he decided to go over to ANZ, and so he got me over. And I was over at ANZ for about a year when this opportunity came up, and I took it as a franchisee because I just wanted to go out there and take the risk of being self-employed rather than work for a bank and get a salary. Because at that time, I was quite confident with the fact that I can go out there and do the hunting and get my business on my own rather than being reliant on sitting in the branch 9 hours a day. So that's where I am at the moment, 18 years later.
Yeah, there you go. It's just such an incredible backstory because, I mean, you've been out for a while in your own franchise with ANZ. You've got a huge following and network based in Brisbane. And I want to ask you, I think it's just incredible. Now, if it's right, can I ask you some difficult questions too? I'm just going to go, now we've finished the pleasantries, I'm going to hit you over the head if that's okay, right? But you're a smart lady, it's fine. Now, interest rates. I know, I'm sorry to bring this up, but I know you've been hit over the head about this all nonstop. Where do you think interest rates are going? Again, I know you're not a stock analyst or anything, but where do you think interest rates are going? And tell us the story behind interest rates. Where do you think it's going and what does it mean to us as the consumers and everything?
Well, I've got to be careful when I answer this question because this is all my opinion.
Yeah, this is all general advice.
It's not an advice, it's a general conversation.
General, so everyone, general discussion, any questions speaks to, but yeah, just mean this generally, just like you're on TV, just general TV talk show. What is
general, everything is so general.
Absolutely general.
So interest rate has gone down. With the COVID that's happened in 2019, I think a lot of banks have predicted that the market's going to crash. So therefore, the interest rate started going down. There was a lot of unforeseen circumstances, a lot of uncertainties. So the reason why the interest rates went down so low is because we just couldn't predict what would happen during the COVID. But it does the opposite. A lot of people sold their business, sold their a lot of people sold their houses or they were struggling with businesses because everyone was scared. But during that time, somehow, the market started moving quite a lot. And then the inflation rate went up, unemployment rate went up. So therefore, we went down with the lower cash rate, and then eventually we had to increase the cash rate. But if you think about it, that was during a time that we would never ever get back to that low interest rate of the cash rate, 1% or 2%, I don't believe. In the last 25 years in lending, I have never ever seen interest rates that low.
Because just on that point as a clarification, so that was done during the whole lockdowns just to keep the economy moving and keeping people, was it basically just to stop the system from collapsing? Was that part of the logic of dropping the cash rate?
That's, in my opinion, that's what happened, just so that you can give people some sort of security that because they've lost their job, because of all those other variations that's involved, they're not going to increase the rate, they're not going to keep the rate because we just didn't. There's a lot of locked in, people lose their business, people lose a lot of money. It was just to help out the system. So I guess that's what happened, is that we reduced the interest rate. Now, doing that, it has the reverse outcome because houses still are going up. Inflation rates are going up, people are still spending, all the living expenses are still quite high. And so Reserve Bank had to start increasing their interest rates. But at the same time, just because they're increasing their interest rates, not going to solve the problem, because there are other things that they've got to consider, such as unemployment rate, inflation rate. So it's a real balance job they had to do. But they increased it so quickly, and there are a lot of people who are fixed in still at 2% because they fixed it in at 2020 and 2021. We still haven't felt the impact of all the people that hasn't come out yet. because interest rates are sitting at 6% at the moment, as opposed to these people being locked in for 2%. So you could imagine if they come out, their repayments are 1,000, they're going to end up being 3,000. Are these people actually sitting down budgeting or thinking about what's going to happen in the next 12 months? So I think 2024 will really give us a real indication of what our market is all about.
And I think that makes sense.
The question, I haven't really answered the question, is that, we have slowed down the cash rate. We could have another increase in cash rate again, but it will be stabilized. And I think we should be right by the end of 2024. That's my opinion.
I agree with you, because interestingly, and this is me being political here. So I'm a member of the Liberal Party, so full disclosure, I love Peter Dutton, the great North Side Queenslander. Our next PM, I believe a lot of people, including me, believe he's going to be our next PM. The guy who probably lives about 10 kilometres away from you, right? And now, I know this is political, right? I know this is a political football, but I find it interesting that what the Liberal Party is doing is the Liberal Party is blaming the raise in interest rates on the Labor government, right? So basically, under us, everything was awesome, but because of Labor, interest rates are going through the roof. Do you think that's legitimate? Do you think that's more just politicians being politicians, or do you think there's any legitimacy to that? I mean, I'm not asking a political question. I'm just more asking about their political spin. What do you think of that?
Well, I think it's all political. In economics, we all know it's very hard to control the market, and when we are going through uncertain times like this is always an opportunity for the opposition to take a spike at the other party. But I do respect the person that's holding the decision in making all these interest rate decisions. It must be very hard. And if things are wrong, then obviously they're the one that takes the hammer, and we're allowed to sit here and give them the opinions that they shouldn't have done this, they shouldn't have done that. But I just feel that we are all trying to do the best for the Australian economy. And to tell you the truth, I don't think we've done badly.
Yeah, well, that's true. Now, again, of course, I want to sit here and tell you how bad Labor is and destroying our country and they're evil. But the thing is, I think you're right, because, again, like, we run an international business community. We got a lot of clients in the UK, Dubai, and also North America, right? Canada, North America. And in America, they're nuts. Like, I think, I don't know their numbers, but the stories out of North America are a million times worse than us. And I want to ask, this is a general question, actually, very general question. Why does, and I agree with you, Australia always seems to do better than the UK and America. Why is that? Do we have a better economy? Do we have better leadership? Is it because we're better looking? Why does Australia always seem to not? Why do we always do better than those idiots? Sorry, I didn't say idiots. Those wonderful people in the Northern Hemisphere. Why do we do so well here?
Well, that's a very complicated question. And I have to say, I don't follow much about what's happening overseas. I do understand that their interest rates and their cash rates are quite low. But if you look at it in a macro economic side, I'm sure there's a lot of things that affects their decisions. Why that is so, it is so complicated, and it's really not my area of expertise to really comment on that. I look at things in a microeconomic side, based mostly in Australia, just so that I can give my customers some sort of comfort in knowing that I know the interest rates are going up. I know there are all these things that's happening in Australia. It's happening in worldwide. But the best way is just to understand what's going on here and being able to just give them some comfort, some advice, and just guiding them through the process so that it doesn't hit them so badly.
Yeah. There's one thing I say this quite proudly and openly, and I'm sure you agree with this, and I'd love to get your thoughts on this point too, is if you're especially coming out of a fixed rate, arrangement, they should definitely talk to you, don't they? So I just want to sort of, I suppose, asking you more about your business now too. Let's say someone needs to refinance. Let's say someone's paying, they know they're paying too much. Let's say someone's about to leave the fixed rate protection. They should, of course, come and talk to you. Tell us a bit about how you help people, be it they need to refinance, they can't keep up, or they're just freaking out coming off the fixed rate cliff. How do you help them, and how do you work with them, and what's your viewpoint there too?
So at the moment, what ANZ does is 3 to 4 months ahead, when the interest rate's actually expiring, the letter is sent out to the customer. I've got my own database. It is probably best that just the conversation to commence as soon as possible. While the interest rate is 1 or 2%, that is really, really low. The income, it certainly can accommodate for a much higher interest, much higher repayment. What I talk to them about is, this is what you're sitting on at the moment. In 3 or 4 months' time, your repayment's going to come up this much. And this is only based on today's interest rate. It's not based on 4 months' time. This could change in 4 months' time. Could go down, could go up. But we've got to cater for what the interest is going to become. So if they come out of a fixed rate of 2% and then going into a variable rate of 5.84%, that we could actually add another 0.5 on top of that to maybe become 6.35%. So we calculate the remaining term and then give them the repayments and ask them, is this comfortable for you? And if it's not, if it's not, let's sit down and budget. Where are you spending your money? Because that's what people do, is that if they've got the extra money in their account, well, we can just go out, we can just do this, we can go on our holidays. But it's going to happen very soon, and you need to budget that, and you need to put that money away. You might even have to start paying that amount so that you're comfortable with it when that time expires. And if they can't, if they're saying that we can't do it, well, what's the next step? What do you want to do? Does that mean that you've got to sell your house? You've got to downsize your house? What is the next step if you're not willing to be able to make that repayment?
And the other side of it is as well, the people that are growing, people that have bought properties, their properties have gone through the roof, right? And they've got all this extra equity. In fact, I want to ask you about that positive as well. Let's say someone owns a few properties or whatever, their property value shot up, they've got heaps more equity in the property. From your viewpoint, how do you handle that? So let's say a customer comes, they're not a customer yet, but someone approaches saying, "Hi, Tu, my property's gone up heaps in value. What can you do?" How do you normally handle that situation? Do you refinance them? What's the general sort of state of play when someone has that equity increase?
Well, it depends on what they want to do with it, Ed. Building the investment portfolio, again, if you can keep them, is the best, in my opinion, again, is that you keep them. Because once you sell them, there is capital gains tax.
Capital gains tax, CGT.
There's real estate agent fees. Then again, if you want to buy another property, there's stamp duty. So there's a cost of converting from one property into another. So if you made a bad decision of buying a bad property and you don't see any growth, cut your loss and sell them. And invest in properties that has been doing well and just keep them. It always goes up. In my 25 years experience in lending, properties around the 10Ks, and it has expanded out more in the outer rim of the Brisbane, the CBD. But the best investments are always within that 15Ks of the CBD. And if they can get one, they can keep it. Don't sell it. Just improve it if you want. And it's forever increasing. Even in the downtime, these properties still do quite well. As opposed to a lot of
I think we might have lost Tu there. Let's see if we can get her back. Friends, I got to say, I love your work. I think we've lost Tu there because you never know how internet and stuff like that works. So what we're going to do, my legendary friends, is I'm just going to sit here and say hello to you for the moment. I think we lost Tu for the moment. I'm going to blame internet and signal, but I'm just going to do a quick monologue on why Tu was amazing. So point one. You've heard a lot from Amazing Tu. She's a powerful lady. She works with ANZ, one of their franchisees, top Australian bank. So what I highly encourage you amazing people to do is this, my friends. Speak to Tu. She's an amazing lady. You can reach out to her on LinkedIn. You can get in touch with her that way, which is a fantastic way of reaching Tu. So there we go. Yep, we've just lost Tu completely at the live stream. So the good news is we're coming towards the end. So a few honourable mentions. Friends, what a fantastic chat we've had with Tu, an absolute industry expert. I think we've got her coming back in now, which is exciting. Oh, my God, we got Tu Dinh back. Tu, I was just doing a monologue of how wonderful you were. So I was just monologuing about how wonderful Tu Dinh is.
It was all good, was it?
It was all good. You can watch the recording. Yeah, there you go. To play the whole time. Now, Tu, I was just going to say, I was just monologuing about how wonderful you are. I just want to, now we got you back, which is awesome. I'll ask you directly. For those listening to, how can people get into contact with you, and what's your process for onboarding new customers? How do you talk to people? Give us a bit more detail on that one too.
So a lot of times I do talk to my customers over the phone now. I think COVID had given us the ability or the skill to be able to communicate and connect people through Zoom and Teams, telephone. Our voice becomes differently. We're more cheerful and we're more connected, I guess. So there is no problem with talking over the phone, especially for customers who are so time poor, they don't like being in the branches anymore. I normally have that general conversation. We talk about their goals, what they are trying to achieve, what they want to do with the home loan. And then we get into the process of, okay, how's servicing going to work? What's the equity going to be like? Then once we agree with whether we want to work together, and obviously they would have to like the pricing, interest rates is everything, obviously. And most of the time with my most top 20% customers, I work closely with them, and the interest rate might be a bit higher than all the other banks or all the other financial institutions. But that's not always the case. People might be sensitive about interest rate, but really what people should be looking at is the relationship, that the skills, the expertise, and the way that the ability that they could sometimes call me on the weekend. Like if they call me on the weekend, I'll answer the phone. I had a conversation with a customer the other day at about 10 o'clock at night because it was urgent. So it's the flexibilities, the relationship and the trust that I like to work on. And clients would give me that benefit of the doubt that I can give them. They may pay a little bit more interest rate, the higher interest rate, and they're paying it to ANZ, not even paying to me, right? Because I'm being paid by ANZ. But sometimes some banks are higher, then they become lower. So if you're just chasing interest rates all the time, you'll be moving banks all the time. And the process after that is that if we're all happy, then we put in an application and it gets processed and approved. It sits there for 90 days. Clients would go and negotiate a property. Then they have that letter from me that says everything's all approved, they're ready to go. And the process is really simplified. I mean, it's harder within the process, but we try to simplify the process for the clients. I don't try to make a big deal with my clients to say that we've got to do this, we've got to jump through obstacles, we've got to jump through hoops to get the application. I don't do that. I try to make it as simplified and streamlined as possible.
Oh, Tu, that's why we love you. We've got Belinda Paris with us. Belinda Paris, we love you, my friend. And we've got Dr. Elwanda. Dr. Elwanda, thank you for tuning in. And friends, if you come in, like, share, and comment. If you're watching a recording as well, and please get in contact with Tu. And also, Tu, as an honourable mention, Tu and I have never met face-to-face yet. We're actually going to meet face-to-face this Friday at a Sofitel Brisbane meetup. Tu, Din, I can't wait till I meet you in the real world this Friday.
Me too, Ed.
Yeah. But there you go. We've heard it straight from Tu Dinh yourself. Connect with her. And friends, thank you so much. And Tu Dinh, I know you're a busy lady. Thank you for your time. We absolutely appreciate you.
Thank you, Ed. This has been a great opportunity. I know that I've been quite reluctant to get on here with you, and you scare me. But it has been quite enjoyable. So thank you very much.
Oh, great job. And Tu, I learned a lot. I loved our general economics discussion because, again, to be honest with you, I'm very much a Liberal Party. Labor caused interest rates to go up, and you've given me a bit more nuance to my black and white political pro-Peter Dutton thinking. So thank you, Tu Dinh.
Thank you, Ed.
Love your work, everyone. Stay awesome. Thanks again, Tu. Keep winning all. See you. Bye.